very much. See you in 2 weeks. We'll now move on to item J2, financial status report. Good evening, Mr. Bonnett.
Mr. Bonnett.
Good evening. This is going to be a really short report. Since we've only been into business for about 1 month without our teachers back yet, but I will point you to the first page, page 1 of the financial status report, and tell you that under the components of ending fund balance, I will be reporting specifically on the reserve facilities where it says MOU 3, that line item that totals $944,000. Those dollars are accumulated through redevelopment pass-through that aren't related to the old revenue limit. And I've been getting information with regard to that from a expert in the field with regard to redevelopment agreements with cities and other agencies. And I expect the last bit of information to come in early next week. And every time I get a bit of information, we do have a conference call. I have a conference call with him to go over that information. So I'll be presenting information with regard to that and the loan with the cities. They're both they're tied together.
Okay.
So I'll be speaking to that probably the second meeting in September. The other thing I would like to talk to the board about is the net decrease in fund balance. When we adopted the budget, we had a $869,000 deficit. So with some most recent changes of personnel, we are looking at reducing that deficit from $869,000 to $425,000. So that's a reduction of about $443,000. And that's as of today. It'll probably go down a little later in the year. The next thing I'd like to talk to the board about is the CalSTRS unfunded liability. You've heard us talk about that. Our CalSTRS rates have gone up from 8.5 to 8.88, which is somewhat significant. And over the years, the state was going to increase the rate up to, I want to say 19%, 18%. Excuse me. So at that time, the projected deficit was $74 billion. Well, through looking at it differently, that amount now is about $59 to $60 million. So it's dropped down.
Wow.
And in the future, we're going to have to
That's the deficit for
CalSTRS,
the whole state.
the whole state.
Billion.
Billion.
Yeah, okay.
I did say billion, didn't I?
You said billion for the 74, but then you said 59 million, I think.
I'm sorry, it was 59 billion.
Okay.
So it went from 74 billion down to 59 to 60 billion dollars.
Over what period of time? Or?
From about June 13th until this last week.
Yeah. That's the current shortfall, in other words?
That's the current shortfall that
Projected.
the state is now reporting out because of some different accounting changes and taking out with a defined benefit plan within STRS that it's fully funded. And I also mentioned this to you because we are going to have to start reporting what that retirement liability is as a school district.
Okay.
So we'll be showing those in our reporting to the board and in our annual audits.
So we'll have to recognize it.
That's correct.
Okay.
Basically, that's the end of my report,
All right.
unless you have questions.
Questions for Mr. Bonnett?
Yeah, I do have a question. So, Mr. Bonnett, the fund balance that we have here now, it does not reflect the closing of the year 13-14 as of yet?
That's correct.
Okay.
The projections for the reduction of the deficit spending will come to you when we, and in much detail, when we do our first interim reporting period to you. We did not do a 45-day budget revise because the income from the state really didn't change much.
Okay.
It was insignificant to report to the board. So we'll be doing the budget
Okay.
transfers and the increases and decreases and be very specific with the board at that first interim reporting period.
So can I assume that with closing of the 13-14 year, and as well as the reduction of the deficit in almost in half, our fund balance should either stay where it's at or increase a little bit more?
That depends on what the fund balance is when we close the books. I
Right.
haven't taken a good look at
Okay.
that. We're still in the process of doing that.
Okay, all right. So this fund balance is really the fund balance we had before closing?
That's as of the budget
Reflects.
adoption.
Right, okay. Thank you.
The reduction in the outstanding liability for CalSTRS to 59-60 billion that you mentioned?
That's correct.
Yeah, does that affect at all the current increase in what the district's going to have to pay? The thing that ultimately goes up to 19% is that percentage somehow related to the size of the deficit, or is that 90% just fixed?
You mean the 19%?
That
That was
in 8 years or whenever
That was a
we're gonna be up to
projection, I would
90%.
say, based on the $74 billion. So
Okay.
I'm assuming that that's going to be reduced,
Okay,
and this is statewide.
okay, so.
So it is attributable statewide.
Okay, so there's a relationship between how much that could go up.
It should be, yes.
Yeah. All right. Well, economic conditions change too, so who knows what, I mean, it could increase too, couldn't it, over?
If
economy
we
goes
take,
south or
if
something?
the economy takes another hit,
Yeah.
yes, it
Yeah.
definitely can.
We can move back.
Because initially, the rate of return that were in these projections and actuarials for STRS were as high as 7.5% annually. And, you know, we haven't been there for the last, probably since 2009.
Right.
Just had a quick question. Are we, in terms of recognizing our CalSTRS contributions, is it for this year, or do we have to go back, or?
It's just for this year, and the rates are projected to go up.
Okay.
I don't have those embedded in my head
It's
yet.
okay, it's okay. Just curious if it's just, because I mean, I've been on the board long enough to know the conversation about us not having to recognize it. And
Yeah.
so the fact that we have to move forward with actually showing what that looks like is different than what we've had before.
We are also recognizing the OPEB liability.
I see that too.
And we are accounting for that in the current year.
Okay.
I want to say it's a little more than 1%
Yeah, it's real
of our
small.
payroll.
Right.
What's the OPEB liability?
Other post-employment benefits, so
Uh-huh,
benefits that you get after you retire.
Yeah.
So for employees that worked X number of years, if they retire after the age of 55, a portion of those benefits are, health benefits are paid until age 65.
Right.
Mhm.
Right.
Those are-
Right.
okay.
It makes sense. You don't want to lose track of anything. So I do appreciate the transparency factor, but it is quite significant if we're considering something that's been mandated and finally it's kind of rolled around where we need to show it. So that's helpful.
And is the showing of the retirement liability a result of a change in accounting rules or a change in some state law?
I believe it's a GASB accounting rule,
Okay.
and the state is invoking it.
I see.
So
So a
there's
little
that
of both.
part, huh?
And is that merely a reporting, like there's going to be a big number it's in a line item on our budget? Or does it actually eat into our, you know, bottom line, or does it, what's the material effect of reporting it on our sort of ending fund balances or on our
It will be
annual
a
budget?
cost that we show in a budget change. It will be reflected in the budget, so it will affect the bottom line.
Well, can I ask this? If we're just recognizing it, I would think that it would be on the balance sheet, correct? Because we don't actually expend it until we pay it. So I would think, and I could be wrong, that, you know, we're setting up these as liabilities to be able to recognize what we do owe. Therefore, when we pay it, then it's an expense, and then it does reduce the, it is counted against the revenue. But until we actually pay out, it doesn't count against revenue. It just shows as a line item on the balance sheet.
Well, actually, we've been paying as you go, so we have been
Right.
paying for current retirees. So
As
the
they
methodology is to take that actual cost and then spread it amongst
Okay.
our employees, in which,
Okay.
to us, it's about 1%, a little bit more than 1%, I think per $100,000 in payroll.
Okay, I see what you're saying. Okay, so it's
Makes it
coming out
more
of payroll.
visible.
Yes.
It's coming out the payroll account, okay.
So that's the magnitude of the effect on the budget will be about 1% per $100,000.
But it's a charge to it's a charge to our, it shows as an expense as we make payroll payments.
Right.
Got it.
Okay.
Okay.
It will sink.
Can I, Ethan?
I have a different question on a different topic, so go
Okay,
ahead.
well, I wanted to kind of piggyback on Member Atfield, comment on the benefits and the, more like the decrease in the STRS, percentage. So what did we budget for 14-15? Did we budget at the high 19%, or did we budget?
We budgeted the 8.88%.
Okay, all right, so we don't, so.
Which is what's required by the state for 14,
For this
15.
year.
Right,
The 19% is
Is-
what we ramp up
is-
to by, what, 2021 or something?
Something like that.
okay.
It's,
But it was a little higher, it was projected to be higher this year, but they reduced it, right?
Mhm.
yes.
Yeah,
Right.
It was in the, like 9.5
Right,
or
exactly.
9.3.
Exactly.
Right.
Okay.
So my somewhat related question to the topic is about the budget approval. Did the county, I assume, approve our budget as of August 15th? They got to take some action as opposed to conditionally approving or not approving?
Last time I spoke to Jeff Potter, they were in the process of drafting the letters to send out to districts regarding approval of budgets and LCAP.
Right. And have we?
And we haven't received it yet.
heard
that I know.
anything
New process.
negative?
New process.
I think the last question was regarding the percentage on item area 3 regarding, that Mr. Bonnett responded to, which is called, I forgot what it
There was a clarifying question with regard to the calculation of the percentage of increased service. You had given me a copy of the formula that you had presented to Oakland Unified, and the district is using the FICMAT
Right.
formula of that same, and I can't remember the term of it either.
The proportionality percentage?
Yes, that's correct.
Yeah. Mhm.
So we have, we revised that slightly. The county office had calculated a different percentage, and I agreed with that change.
Mhm.
And they were asking clarifying questions of all districts in the county, I think with the exception of one district.
Mhm. But, so we're talking about two things here. One is the budget approval, and one is the LCAP approval, which the county did together on August 15th. So,
Just haven't gotten any.
We haven't received any information from the county yet
on budget or LCAP?
on budget.
on budget.
We've got some clarifying questions on LCAP.
Just one clarifying question.
On just the proportionality percentage?
Yes, but the LCAP was approved.
Yeah,
Yeah.
yeah. So that, I mean, that, which is my understanding, is that Alameda County approved all the LCAPs. And that, but they also had clarifying questions for all the districts, maybe all but one. And a lot of them around the proportionality calculations.
There were two districts that stood out in Northern California area. One was Berkeley Unified, and the other was San Jose Unified. So the state is using Berkeley Unified and San Jose Unified's LCAP as a model going forward. I do know that.
Yeah, stood out on what criteria and a model for what?
Positively.
Uh-huh.
I don't know what criteria they use,
Okay.
but
Okay. Well, I think ours is as good a model as Berkeley's, so that's what I'll say. Yeah, I can send you I've got the 3-page letter that Alameda County sent that lists the questions asked different districts. So if you have, I'll send it to you too.
Nice. Any other questions for Mr. Bonnett on financial status report? Any public comments on the financial status reports? All right. Thank you very much.